another module. In this module, we're going to talk about entries and entries in terms of what's the difference between waiting for the candle to close to take an entry versus waiting for an impulse entry. These are very two different things because whenever you're looking at a chart and let's say the price is consolidating or you're looking for a counter trend trade which we've covered in other modules or you're looking for price to retest the high or retest the low, you're kind of gauging, should I wait for the candle to close or should I wait for an impulse entry? The problem is, as you're going to wait for the candle to close, is that sometimes the candle will continue to move bullish. Let's say if you're looking for a buy, it's going to continue to move bullish. And as you're waiting, you may miss that trade. So and in those moments, it's better to look for an impulse entry. But here's the problem in the beginning, you may not be too familiar with impulse entries. You may not understand the right way to look for an impulse entry or what's the right time to enter for an impulse entry because, believe it or not, it's all about timing. I know we have a lot of students, and a lot of students are looking at, let's say, the London session chat, the New York session chat, where some traders are posting charts, where some traders are posting their wins, and they've taken their trades based on impulse entries, and then they're confused. They're like, man, why the fuck are these guys taking impulse entries? Why and why am I waiting for the candle to close? To be honest, when I first started trading, I knew that all I had to do was to wait for the candle to close. If a candle can close in my direction, then there's a high probability that the next candle will continue in the same direction as well. Let's say if that's the 30-minute candle, the 1 hour candle, the 4 hour candle, whatever. 15-minute is, I'd say 15 minutes is a weak confirmation, so I wouldn't really go in depth on the 15-minute time frame. But the 30-minute, 1 hour, 4 hour, you gotta wait for the candle to close. If you're a new trader, you have to wait for the candle to close. There's no way around that. Because as you're waiting for the candle to close, the candle will move in the direction. It may not close, and you might look at the trade and you might say, oh man, you know what? I've missed a trade. And then you investigate. Then you look at the chart and you try to explain to yourself, where could I have taken an impulse entry? Rather than the candle goes in your favor and you've missed a trade and you take a buy at the very top. Or if the candle falls, you take a sell at the very bottom, anticipating the price to continue moving. But most times it's not going to happen. Most times, this is why people run into the problems like, oh man, I'm taking a buy and price is going against me. I'm taking a sell and price is going against me. I don't know what to do, because the problem is you're not focusing on the best entry point. So let's get down over here and let's talk about some scenarios where it's better to wait for a candle to close, right? So the number one scenario, we all know about this. Let's say, for example, price is moving down and we are trying to create some sort of a low, right? So price moves down, we move down like this, and now we've created some sort of a low. We have a support form, and all we're doing is we're waiting for a candle to close bearish like this. Once we have a candle closing bearish, let's say this is the 30-minute time frame, we all know that, okay, the candle has closed bearish. Maybe now I can take a sell as the next candle starts, right? So as the next candle starts, you're taking a sell, you're anticipating price to continue pushing down, provided there's volume in the market, okay? There has to be volume in the market. It has to be pre-London, has to be London Open, pre-New York, New York Open, NYC, London close, pre-Asian or Asian Open. There has to be volume in the market. If there's no volume in the market, certain patterns are not going to work. Candles aren't going to move in a certain way, which some guys say, oh, you say candles are going to move in a certain way in your webinars, but looking at the charts, they're not moving in that way. What's going on? Right? So this is the first scenario where you have to wait for the candle to close. We're also going to go over some examples later on too, but this is very, very important. This is where, we all know this. If this is the 30-minute time frame, the higher time frame could be like this. You got the let's say this is the 4 hour, and the 4 hour is just coming down to fill this wick, which is the bottom over here, and this is the bottom right over here as well. We've explained these concepts in great detail in some of the modules. Now, this is the first scenario. Second scenario, where you have to wait for the candle to close, is something like, let's say, for example, price is coming down, we're going bearish like this, we're going bearish, and then, like, let's say price starts to consolidate, we start to move up, whatever, and then, we start to consolidate like this, and there's basically nothing happening. So basically, we're creating a support and we're creating a resistance like this, and price is just, ranging in this area, not going anywhere at all, So this is what you're faced with. Now, what we have in this scenario is we have a wick right over here, or you could have a wick like this in this scenario. So once you have a wick at this point, this is where it's important to wait for the candle to close in this area, because if you have a wick rejection right here, and this candle couldn't close above, this candle couldn't close above, and let's say we have another candle that tried to go up, it couldn't close above, and we're still consolidating, we're ranging here, candles are printing like this, not really going anywhere. This is the point, this is the moment where you have to wait for a candle to close, because believe it or not, these are wicks here to the left hand side. We've all seen these examples in the charts. We've all seen these situations, these patterns, so the best thing to do is to wait for a candle to close above this area. That's it. Because now, when you have a candle closing above this area, look what's happened. This candle right here, it couldn't close above. Let's say this price was 2023.40. Hypothetically, 2023.40. Let's say this was the price, 2023.40. This candle couldn't close above. This candle couldn't close above. This one as well. This one, this one, this one, this one, and then this candle. This candle, I like to call this the gladiator. Right now, hear me out. The reason why I call this a gladiator is this. So back in the day, you had these wars, these duels, right? And all the slaves would fight against the wall, whatever. Then there'd be one strong slave. He would break through the roads. He would break through the barriers, making way for the next or the people behind him to continue moving in the same direction. So this candle here, this candle has done something what 1, 2, 3, 4, 5, 6, 7 candles couldn't do. Okay? This candle has done something that these other 7 candles, they couldn't do. So now, what's the probability of the next candle to continue to push up? There's a high probability. Now, someone can say, well, the next candle can go back down in the range and this move up can be a fake out. Yes, it could be. But you got to ask yourself, what's the probability? If the trend is bearish and we're consolidating, trend is not bearish anymore because we're consolidating. Okay? So this is also something you need to really understand. The trend is only bearish if we come down, we retrace, create resistance, and then continue to push down. That's where you have a bearish trend. Over here, the trend is fucking consolidating over here. We are ranging, and we've seen these in the charts before. This is ranging. What we have in this scenario, is this candle that's closing above 2023.40. You have wick rejections to the left-hand side. Now, someone can argue, well, we have wick rejections to the left-hand side, so this means the next candle can reject in this area and go down. But let me break it down to you. The reason why we are waiting for a candle to break and close above 2023.40 is that as this candle is open, we don't know whether this candle will reject like this wick or this wick. We don't know that because this fucking candle can just, this candle can wick down and form like this here as well because it got rejected, right? So if you're taking a buy over here because you're like, oh, we're breaking above 2023, we should go up, or you're taking a buy over here, guess what's happening? There's a rejection here to the left-hand side, so we don't know whether this candle will reject in the same area or not. We just don't know that. We don't have a crystal ball. No matter how experienced you are, we don't know that information, right? So what's more important is wait for the candle. So the best case scenario is a candle closes in this area. When a candle has closed above this consolidation range, in these wicks here to the left-hand side, this means that the next candle has a higher probability to fill these wicks. That's what we call a wick fill when you have wicks here to the left hand side. Does this make sense? Okay, if not, just go over the last 3 minutes, maybe 3 or 4 times, then you're gonna understand exactly what I'm saying over here. Right now, once we've come up to fill this wick, this is where you can say, okay, I waited for this candle to break and close above 2023.40. Now, since we've broken and closed above 2023.40, that is my confirmation candle, because now it's confirming that we've broken above an area which no one could break up, and now there's a high probability for the next candle to continue pushing up and to have these wick fills here, right? Now, in this scenario, this is part A. So now let's move over to part B in this area. Let me do something here which I've never done before. Let's see if this works. Okay. All right, let's try this again. Okay. Duplicate. Oh, there we go. This is working. Awesome. Awesome. Long live iPads. Okay, great. So now this is scenario B, right? So scenario B is this. We have wicks to the left hand side, same idea, same concept, nothing has changed. Scenario B is this, that this candle breaks above this area and continues to push up. And we come up over here. We continue to push up, we break above the zone, we fill these wicks, and we come up over here. Now you're looking at this and you're just saying, okay, you know what? I'm waiting for the candle to close, and the candle has basically closed above the range. It has moved a lot. There was no, for me personally, there was no impulse entries because, we were just waiting for the candle to close, but we moved so up high at this point, I don't know what to do. So whenever I see this scenario, I'm like, okay, this is perfect. This is awesome. Because the best case scenario in this case is that, okay, all we got to do is wait for some sort of a retracement, right? Maybe a retracement can come in this sort or whatever, and then we form some sort of a support, right? Retracement, support, and we've broken above the range, so there's a high probability for our next candle to continue pushing up. So whenever you see a candle that has broken above a zone and broken above these wicks and made a big candle, don't be sad that you've missed a trade. Of course you've missed a trade. Of course there was no confirmation. Of course there were rejections here to the left-hand side. So you didn't know whether this candle will reject or it will continue to push up. We didn't know that. No one knew that. So in this case, the best scenario is to calm down, baby. You got to calm down and wait for you got to calm down and you got to wait for price to retrace, create support, and then continue to push up. That's the best case scenario in this situation, right? So these are, I think, the best ways where you're waiting for the candle to close. So the number one was when we have a low form, price comes up, creates resistance, candle closes, with the confirmation. This is your confirmation candle, and next candle moves down, That's where you're waiting for the candle to close. Right over here as well, in this scenario, when you have wicks here to the left-hand side, you're waiting for the candle to close in these wicks so that the next candle can be a potential wick fill of the wicks to the left-hand side. That's the second one. The third one is that you missed the trade because you're waiting for the candle to close and the candle continues to move. So now you're like, okay, I'm going to wait for price to retrace, create support, and then continue to push up, right? So this scenario ties very well to the first scenario we talked about, right? Makes sense? Beautiful. And remember, we're not here to make sense. We're here to make dollars. We don't make sense. Okay. Now, what's this? Don't use Siri. Now, let's discuss the scenarios where it's important to wait for an impulse entry or to execute on an impulse entry. Now, some of these scenarios we've discussed in the impulse entry module, so we're just going to go over those as well. The best scenario, which I know for an impulse entry, is probably, I'd say, in a trending market. For example, let's say you have a candle that's moving bullish like this, boom, boom, boom. Candle moves bullish, and then you have a bearish candle that forms like this. If you've been through the impulse entry scenario, this is where impulse entry works the best. Like as long as the next candle does not break the previous low and it breaks this high right over here, boom, buy. Impulse entry goes in and there's a high probability for price to move down. The same is true if candles are pushing bearish, boom, like this, boom. We have bearish candles forming and you have some sort of a bullish candle form like this, and now you're expecting the next bearish candle to break below this low, respect the previous high, and continue to push down. The candle is a little crooked, but you get the idea, right? Impulse entries in this scenario, beautiful, perfect. There's no problem in this, right? Now, the problem comes in with impulse entries, which people don't realize, is that let's say, for example, we are, creating some sort of a resistance. So we got a bullish candle, and next is a bearish candle that forms like this with a big wick, and now you're anticipating price to continue pushing down, right? The problem is, when you look at this wick right here, this wick is way too big for an impulse entry. And a lot of people make this mistake. I've seen traders make this mistake in Discord this past week, the week before that, especially when we have news events. I've seen traders make this mistake all the time, because they learned about impulse entries. Oh, impulse entries is easy. Wait for the candle to break the low, take a sell, blah, blah, blah. And then, oh man, I'm still losing impulse entries. I don't know what's going on. Raja keeps winning impulse entries. He's manipulating some shit. He's scamming, blah, blah. Man, listen. You have to truly understand impulse entries, right? So if we're looking at this scenario, and if you are someone who's saying that, okay, I'm going to wait for this candle to break below this low right over here, and I'm going to take a sell for price to continue pushing down. Now ask yourself this question. You waited. So let's say this is the 30-minute time frame on gold, right? Now you waited price to move, let's say 5 to 8 pips. You waited price to move 5 to 8 pips, and then you're taking a sell for price to move down. How does that even make sense? That makes no sense at all, because this wick is way too big for an impulse entry. You can't let go of pips, which you could have captured, in the essence of saying, okay, I'm getting an impulse entry. It doesn't work like that, right? The best thing is you want this wick to be small. Now don't ask me how big this wick should be. It should be like 2 pips, 3 pips, 4. It should be a small wick. So as soon as this candle breaks this low here to the left-hand side, you're like, okay, impulse entry makes sense. Because it makes no sense at all if the wick is this big and you're taking a sell over here for price to move down. It makes no sense at all, man. Please stop doing that, right? This is where you need to pull up your big boy pants, and you need to say, okay, we have resistance formed. I have my confirmation candle form right over here. And now what's the probability for the next candle to move down? And you're like, okay, I'm going to take a sell right over here and anticipate price to continue pushing down instead of what's the word? Instead of ignoring, I don't know, whatever. Instead of ignoring these pips and getting more pips. No, it doesn't make any sense. Plus also, if you're taking a sell over here, your stop loss is all the way up over there. Or your stop loss is all the way up over here. Why? Doesn't make any sense. So whenever you have a candle that has, even in bullish scenarios, let's say like this, right? Even, let's say you have a candle which has like a semi big wick, and you're saying that, oh, I don't want to take a buy over here, even though I have confirmation, even though the trend is up, even though there's volume in the market, even though everything points for price to move up, I don't want to take a buy here, and I want to sacrifice these 4 to 5 pips of this wick and then take a buy up over here. That makes no sense, because if you're taking a buy up over here, your stop loss is down here, stop loss is bigger, right? But if you're taking a buy at this point, your stop loss is smaller. So what would you want to do? Would you want to sacrifice, these 4 to 5 pips and have a big stop loss? Or do you want to execute with confidence as the candle opens because you have confirmations here, have a small stop loss, gain these 4 to 5 pips and some more as the candle moves up? Your decision, not mine. Not mine, it's your decision. So you got to decide what's going to be better for you as you're looking at price action, So whenever you're looking at impulse entries, these are my favorite patterns right here. This one and this one. These are my go-to patterns. Whenever I see these patterns, I'm going in with impulse entries. And man, trust me, the difference between deciding whether to wait for the candle to close or whether you want to go for an impulse entry, there's not much big of a difference. The main difference is this right over here, when you have wicks here to the left-hand side, just wait for the candle to close. Just wait for the candle to close. The reason why people go for impulse entries, even when the candles have, wicks over here or wicks over here, is I think because there's lack of confidence. And man, please, when you have wicks like these, don't go for impulse entries, because if you have lack of confidence, just don't execute on it at all, because if you're sacrificing this wick fill, if you're sacrificing this wick fill and you enter right over here, maybe price can retrace after that. So that's much more damaging to your psychology. If you're executing as the candle starts, then price moves down, you're up 4 or 5 pips, whatever, and we start to retrace, you have an opportunity to manage risk, right? You have an opportunity to manage risk. Because if you're entering at the bottom, there's a high probability for price to retrace. So there's no opportunity to manage risk. You're already in drawdown. So watch this part, the last 3-4 minutes, 3 or 4 times. Watch it and make notes and go over some mistakes you made in the past. And 100%, I can guarantee you that you will find some mistakes. You will see that majority of losses you took on impulse entries were because you were executing at the bottom of the wick over here. For an impulse entry to work out, this wick should be as small as possible, or I have no wick at all. If you have no wick at all, over here and over here, man, this is the best case scenario. And to be honest, when I take impulse entries, these are the scenarios I go with. So I'm going to give this a blue star right over here, because these are my go-to impulse entry scenarios. When there's a wick, I don't go with that. So hope this helped. Hope this helped you guys. This was actually a very long overdue webinar that we wanted to do, but the reason why I took my time with this was because I wanted everyone to go through impulse entries. I wanted you guys to go through the pain of missing the trade as you're waiting for the candle to close, and then drop this differences. So hope this helped. In the next module, you'll see we're going to go over some examples. So I guess we're done. Take care, everyone. Good luck.